Most LLC owners are paying themselves wrong, and the IRS is completely fine with it because that means more money for them. Here's the thing, when you start an LLC, nobody hands you a manual. You figure out how to register, you get your EIN, maybe you open a business bank account, and then at some point you just transfer money to yourself and hope for the best. Sounds familiar? The problem is how you pay yourself as an LLC owner has a direct impact on how much you owe in taxes. And most people don't find that out until they're sitting across from a tax professional with a bill they were not expecting. I'm Kiera, I'm an enrolled agent, federally authorized to represent taxpayers before the IRS. I work with LLC owners on this all the time, so let's break it down in a way that actually makes sense. Here's what makes this topic a little tricky. How should you pay yourself depends on how your LLC is taxed, and your LLC can be taxed in more than one way. By default, meaning you didn't make any special elections when you formed it, a single member LLC is taxed as a sole proprietorship. That means the IRS doesn't see your business as a separate taxpayer. All the profit flows directly to your personal return, all of it. In that situation, there is no paycheck, there's no salary, you just take the money out of the business whenever you need it. That's called an owner's draw. You're not an employee of your own business, you're the owner. And the money you take out isn't taxed when you take it, it's taxed when the business makes it. Now, if you have a multi-member LLC, meaning you have a business partner, by default, it's taxed as a partnership. Same basic concept. You take draws, not a salary. But here's where it gets important. If you've elected to have your LLC taxed as an S-Corp, which is a separate election you make with the IRS, now the rules have completely changed. Let's stay with the default LLC for a second because this is where most people are. If you have a single member LLC, you've made $80K in profit this year, you paid yourself by transferring money from your business account to your personal account throughout the year. Maybe $3,000 here, maybe $5,000 there. Here's what happens at tax time. It doesn't matter how much you've transferred, but what matters is how much your business made. All $80,000 is going on your tax return as income, and all $80,000 is subject to self-employment tax, that 15.3% that covers Social Security and Medicare. So those transfers you made throughout the year, those weren't paychecks. There was no tax withheld, no employer matching, nothing, which means in April, you're writing a check to the IRS for everything at once. Income tax plus self-employment tax, and for a lot of people, that number is a gut punch. This is why quarterly estimated payments exist. Because as a self-employed LLC owner, you're supposed to be paying taxes 4 times a year, not once. If you're not doing that, you're going to owe a penalty on top of whatever you owe. The draw itself is simple. The tax planning around it is where people get tripped up. Now, if your LLC is taxed as an S-Corp, the whole approach changes. In this scenario, you are both an owner and an employee of the business, which means you are required to pay yourself a salary, a real W-2 paycheck with taxes withheld. You can't just transfer money and call it a day. The IRS requires the salary to be reasonable, meaning it should reflect what you'd actually pay someone else to do the work you do in your business. You can't pay yourself $1 a year and dodge payroll taxes. That's a quick way to end up in an audit. But here's the benefit. Once you've paid yourself a reasonable salary, any additional profit you take out as a distribution is not subject to self-employment tax. That's the whole game with S-Corp. Splitting your income between salary and distribution to reduce your overall tax burden. The catch, and I talked about this in detail in my S-Corp versus LLC video, is that running payroll costs money. There's software, there's quarterly filings, there's a separate business tax return. So the S-Corp only saves you money when you're profitable enough that the savings exceed the added costs. Let me give you 3 mistakes I see most often. Mistake 1, mixing personal and business money. If you're running transactions through your personal account or using your personal card for business expenses, your books are a mess. And messy books mean missed deductions, which means you're overpaying taxes somewhere. Keep them separate all the time, always. Mistake number 2, not paying quarterly estimated taxes. If you're a default LLC owner, nobody is withholding taxes from your income automatically. That is your job. The IRS expects payments in April, June, September, and January. Skip those and you'll owe a penalty even if you pay everything in full at tax time. Mistake 3, thinking any transfer from your business account is a business expense. It's not. Moving money from your business account to your personal account is not an expense. It doesn't reduce your taxable income. I've seen people try to write off their own draws. It doesn't work that way. Here's what you take away from this. How you pay yourself as an LLC owner depends on your tax structure. Default LLC means owner's draw. All profit is taxable regardless of what you actually pull out. You're responsible for your own estimated taxes. C-Corp election means you pay yourself a reasonable salary through payroll and take additional profit as distributions. Neither one is automatically better. The right answer depends on where your numbers are. If you want a simple checklist to make sure you're set up correctly as a new LLC owner, I put one together, the monthly bookkeeping checklist. It walks you through exactly what you should track every month so tax time isn't a disaster. The link is in the description and it's free. If you're sitting here realizing you've been doing this wrong and you want to get it sorted out before it becomes a bigger problem, my consultation link is in the description too. And that's what I'm here for. Subscribe for more videos like this, new content every week.